me welcome our guest on board. We have Mr. Rudramurthy, the research head at Bachna Investments, joining in on the platform. Welcome to you, Rudra. Good to have you with us. Well, after a prolonged 5 weeks of a pain, we have seen that last couple of days have actually turned out to be positive for the D Street. And of course, with the sentiments improving around ceasefire announcement with the, both the countries involved, although there is still some doubt because Israel is now emerging as not the part of the truce, and therefore there is still some kind of a hesitation whether there will be a continuation of the cessation of the war, or is it just a trading aspect that we are looking at. Today the markets are slightly soft. What's your opinion?
Sakshi, good afternoon. Thanks so much for having me in your show. See, let me make it very, very clear. Keep aside the war front news flows, what you are getting. One thing is very, very clear. If you see last 3, 4 trading sessions, market is digesting all negative news. Now, how do you know that? Any gap down opening which you are seeing because of these negative news from war front is getting bought into, and market is closing at the highs of the day. Forget the yesterday's big move of 900 points on Sensex, 3000 points on Sensex, in fact, and 900 points on Nifty. Forget that big move yesterday, but you also see what has happened for last 2, 3 trading sessions before that. Every gap down open, whatever we have seen because of the negative news on war front, is getting bought into, and market is closing at the highs of the day. That indicates to me that now all the war front negative news is getting ignored, and that's a very, very good sign which I have not seen in last 5 weeks. Once the war broke out and we were seeing a clear sell on rise kind of a market, and now I'm clearly telling you from last 3, 4 trading session, it is clearly indicating to me now that market has turned into a buy on dip market. So use every dip in market as a buying opportunity. And let me tell you, after that fearful move yesterday, looking out for those ceasefire news, what you saw, I feel market will give some amount of small profit booking or small correction, and Nifty can come to those levels of around 23,500. So here and there plus or minus 200 points around, you can definitely use opportunities in market. And if you get any negative news from the war front and you get Nifty to those levels, that is a time when you can even pick stocks from different sectors where you have relative strength. And I want to be a buyer on every dip in this market. And I'm making a clear statement that yes, this market has now reversed its downtrend. And from sell on every rise kind of a market, which we have seen for last 4, 5 weeks, now it has turned into a buy on dip market. And last 3, 4 trading sessions are clearly giving me that signal.
Okay, Rudra, I want to ask you, at this point in time, are you, buying aggressively? Are you still being calculative? What are you advising to the clients, or are there any specific sectors that are giving you that signals of a turnaround?
See, let me tell you, even today, the news of Anthropic and the IT stocks not performing for today, yesterday, they're all very good signs, because when you saw the fall in market from the high levels of the 26,200, when Nifty corrected, the first fall came in IT, whether it is because of AI or whatever disruptions in AI you have heard for, keep that aside. But let me tell you, the fall in market from all-time high came first from IT as a sector, and whenever market recovered with IT being the front runner or participating in the up move, I always told in your show only that it's a dead cat bounce. Don't believe this up move. It is just a reversal moves what you are getting in a clear downtrend. But however, now if you see yesterday's up move, the move is not through IT, it is through financials, it is through public sector banks, it is through NBFCs, autos even participated, and it was a very broad based buying what you saw yesterday. And even if you see advanced decline ratio, even if you see FII selling which has gone down drastically, you take last 1 week trading session and see what FIIs were doing. On an average, they were selling 7,000 to 8,000 crore in cash market. But if you see yesterday selling, it was only around 2,700, 2,800 crore if I'm not wrong. And there is a huge fall in terms of even volatility index. Yesterday volatility index came down by about 20% if I'm not wrong. So what I want to tell you is the rally yesterday what we saw was led by financials and not by IT, which is a very good sign. I am not telling you to go ahead and buy now. In fact, 2-3 days back only, there was a clear signal when even I wrote on my Twitter that it is an opportunity to buy. That was before ceasefire. And also, I was lucky enough to say that yes, Donald Trump had those ceasefire announcements, and then market gave yesterday a big gap up. But what I want to now tell you, if you have not gone long and if you still have not taken any positions yet and you are waiting for this war news to end, I can clearly tell you, wait for a dip of at least 200, 300 points on Nifty. So from current levels where Nifty is, I want you to wait. So now you are on spot at around 23,800, 900. Wait for at least 200, 300 point dip and wait for Nifty to come to those 23,500, 23,350 zone. And if you get opportunity when Nifty comes to the 23,350, 23,500 zone, buy sectors and stocks where you had relative strength. And if you want to name some of them, yes, for me, PSU banks looks very strong as a sector. Either choice between stocks like SBI, Bank of Baroda, or for that matter, even Punjab National Bank. So these are all Union Bank. So these are all stocks, PSU banks, especially where you have a lot of strength, relative strength. And if you want to have safety, yes, SBI is the best among all these names, whatever I have told in PSU Bank. And for me, PSU Bank has definite relative strength and even valuation comfort. Second, look at NBFC. Look at names like Bajaj Finance, Chola Finance, Shriram Finance, L&T Finance. They are doing for me very, very good. So any dip because of overall market correction, because of some negative news from the war front, and you get any dip in these stocks and the sector of NBFC, that will be a great buying opportunity again. And I've also seen enough beating down happening in crude sensitive stocks. So names like Indigo was all up 10-12% yesterday, and today it is just giving you that 1.5-2% kind of a dip. So another 2% more from current level. For me, stocks like Asian Paint, Pidilite, Indigo, and even OMCs looks very good to me. Having seen huge correction, for me, IOC stands out. Indian Oil Corporation on chart also looks very, very strong. So look at even the basket of the OMC stocks, where for me, among all the OMC stocks, whether it is IOC, BPCL, HPCL, IOC looks very, very strong. And even autos are looking strong to me, having seen good correction in stocks like Ashok Leyland, and even for that matter, stocks like Eicher Motor, Maruti, they're all looking very good to me. So for me, it's a choice in all these sectors and names, whatever I've told you. And specifically on stocks, if you see, even energy and power as a theme looks very, very strong to me. So look at stocks like, for example, NTPC, look at Power Grid, and even capital goods names like, for example, BHEL, and even names like Siemens and ABB. All these are areas where you are clearly seeing relative strength. So I've given so many names, stock names, I've given so many sectors also where you have relative strength. But one sector to avoid even here for me is IT. And if you want to still pick stocks from IT, you have to be very choosy from that sector. And even today, you had a morning news from Anthropic on releasing certain new updated versions of Cloud, and these things will not be favorable to IT as a sector. But if you force me to pick stocks from IT, then yes, I will tell you, look at Infosys and look at Tech Mahindra. These are two stocks which have relative strength, and even HCL Technology looks very strong. So let us see today what comes out from TCS, and that will give you an overall view of how the IT result season will pan out this quarter. So based on that, you can take a call, but still I will avoid IT at this level. Let us see how the quarter results come. But the other names and sectors which I have told you, you have hell lot of opportunity, and this is a clear buy on dip market, and it has changed the structure from a sell on rise to a buy on dip market. But don't buy at current level if you don't have fresh long trading position. Wait for those levels of 23,500 which you will get in a day or two, and then go all out and buy. I will have a stop loss of 23,200 on Nifty spot. I will buy in the range of 23,350 to 23,500. And yes, this is now a buy on dip market and not a sell on rise market.
Okay, fair point. Got that. I hope all our viewers have noted that long list down and understood where exactly to scout for opportunities, what will give you the benefit in the long term as well. Let's start taking some questions now. Rudra, we have a lot of our viewers joining in. We have the first query from Mohit. He says, Rudra sir, on Shakti pumps and on Jush engineering, would you advise a lump sum investment if I have a 2-year view on Shakti pumps and Jush engineering?
See, Shakti Pump has seen a huge fall. In fact, it has corrected from those levels of around 800 to these levels of around 500. So the fall has been close to 40-50% in last 3 months. But it's a fabulous company. It has given huge wealth to its investors in the past. And now after this correction, definitely it gives a great buying opportunity. So keeping a stop loss of around 450. I know it is bit deep and it is about 10% from current market price. So around 450 zone, I will keep a stop loss and I will accumulate this stock in the range of 500 to 520 and look at targets of around 750 to come on Shakti Pump. So good stock to buy and definitely it's a fundamentally strong stock. What's the other stock we had, Sakshi? Yeah?
Jush engineering.
Okay, so let me just get into the charts of Just Engineering. Yeah, another stock which has seen again very deep correction from the levels where it was around 600, 620. From there, the stock came to those levels of close to 320, 330, which was 50% kind of a correction. And now from those zones, you are seeing some amount of respite in the stock. So yes, even this stock, if you want to buy at current market price, keep a stop loss of around 350 and 380 to 400 will be a good accumulation zone and you can definitely buy even Just Engineering. 350 should be the stop loss on closing basis for the stock and yes, it can regain and test levels closer to 500 and then from there on, let's see how it will perform.
Okay. We have the next query from Shrikant from Bangalore. He says, hi Sakshi, hello Rudra sir, good afternoon. Good afternoon to you as well, Shrikant. He says, I have a question on auto stocks like Gabriel India, which I have at 450, and JBM Auto, which I have at 600. I have been holding both these stocks since 3 years now, and I want to know whether I can expect them to become multi-bagger over the next 1 to 2 years. What would you advise? So he's already on profits. 450 was his purchase level for Gabriel. Currently, it's trading at around 920 odd levels. For JBM Auto, his entry price was 600. Any thoughts here, Rudra?
Both stocks from auto auxiliary look good to me. Just hold on to what you have and you can keep a stop loss for Gabriel at around 750 and even JBM Auto looks good to me. That is also a hold and if you want a stop loss for JBM Auto, so I will recommend to you to keep a stop loss might be closer to 550. So with these levels, just hold on. Both looks very good and wait. Definitely, I will say mid and small cap performance will start anytime soon. And all those people who have got fed up from mid and small cap, especially the broader markets which have not performed from October 2024, which has tested patience for last 1.5 years, I'm very sure Sakshi it will start performing, but you have to be in the right stocks. So that is where I say yes, JBM, Auto and Gabriel are good stock. Hold on and Auto Auxiliary will also do good and broader market with quality stocks like this will do good. It is testing your patience but definitely time to accumulate and hold on.
Okay. We have a query from Nirmal. He says, sir, I have purchased 6,000 Mannapuram shares at 305 in margin trading facility in 25 days ago. And I want to know what should be my strategy in the current market scenario on Mannapuram.
Sakshi, first let me talk on the stock and then about the margin funding and the leverage, whatever the client is stuck. And first let me talk about Mannapuram. For me, now NBFCs are definitely showing relative strength and I do told you about stocks like Shriram Finance, Chola Finance, Bajaj Finance, L&T Finance, they all look very strong. And post that definitely yes, gold finance companies like Manappuram, Muthoot also looks very strong. So for me, Manappuram is a clear buy at current price of 265, I will be a buyer. I'm giving 310 as a trading target. It is available even in futures. Even our viewers who are watching this show can look at buying Manappuram at current market price. So 310, 300 to 310 will be my first target. And yes, keep a stop loss of around 250 for this call. So a risk reward like 1:5 kind of a risk reward from current market price. So a clear buy on Manappuram. And let me now talk about this margin trading, and then, okay, you have taken it for loan and then you're paying interest and then you're also continuing with the stock, all that. So leverage is something what you should understand well. That is where position sizing plays a very important role. And let me tell you, if someone who wants to, our viewer here, who wants to become a successful trader and you want to stay in this market for a long time and make big money, you have to understand leverage and position sizing. It's not just picking the stock, it is not just understanding the market direction. For me, position sizing and leverage is everything. So I don't advocate people to take this kind of a leverage if you don't understand your risk involved into it and if you don't understand the market sentiment. Yes, when markets are on clear uptrend and it is in a bull run, all these things work very well. But what you have seen in especially last 1.5 2 years, and more so in last 1 month post this February 28th war broke out time, all those people who had lot of leverage, that leverage definitely got unwound. And leverage is always a two-edged sword. It will take you up faster and also it will take you down also very, very fast. So you have to understand the leverage. And let me end and give lot of gyan through Charlie Munger. Charlie Munger, guru of Warren Buffett, partner of Warren Buffett, said this statement. He said only three things can destroy a man, and all that comes from L. He said it is lady, liquor, and leverage.
Interesting thought there. But let's quickly look at some of the other queries that are coming in. This one is from Vinita Gupta, who says, good afternoon, Sakshi. I want to know whether a partial profit booking is advised on allied blenders. I have this share in my portfolio at 425. Would you advise any partial profit taking here, Rudra?
Sakshi, I don't track this stock as close
Okay.
as, but still to see the chart, can you just help me out with the stock again, once again, Allied?
Allied blenders, correct. ABDL, you'll find it by the name or code.
ABDL. Okay. So thank you, Sakshi, for that help. And see, if I just see the chart pattern, it has just corrected from those highs of around 675 and it came down as low as around 380. But yes, for last few trading sessions, it is showing some strength. Purely based on chart pattern, I'll tell you, you can look at this 490 as an important hurdle. If stock crosses 490, yes, it can go till 540, which is the next hurdle. So I will advocate the viewer to hold on to the stock allied blenders and keep a tight stop loss on a closing basis of around 440, and any move towards that 535, 540 zone, look at partial profit booking.
Okay. Let's take another view, and this one is from Kalpesh Kacharia. The question coming in on short selling strategy for April expiry in Kotak Mahindra Bank. At 380, he's short this position for a target of 305. Is it possible in April series?
See, Sakshi, I will be very, very clear. In market like now, look at buying opportunity than shorting opportunity. Yes, last time when I was in your show, I was saying this is a dead cat bounce, any
Yeah.
rise is a selling opportunity, all that. But now, no. I'm saying look at opportunity to buy the dips. The market texture has changed from sell on rise to buy on dip, and I also told you why. But let me also tell you from private banks, yes, Kotak Bank is one of the weakest counter. If you see other banks like ICICI Bank, or even if you see the second tier banks like your RBL Bank, or even for that matter, your Indus India banks, Bandhan banks, or PSU banks for that matter, they have relatively strength there. But yes, if you want to short and if you are picking a weaker bank, I will say Kotak is a weaker bank. But what I would advocate, because the overall market texture is buy on dip and not a sell on rise market, better to cover your Kotak Bank shorts at the earliest and look at other opportunities where you have relative strength on the buy side. Don't ever fight the market and its trend. I always say don't fight the market nor with your wife. They are always right. You have to adjust with them and not fight with them.
Okay, got that. We'll take Momita's question next. She's from Kolkata and says, good afternoon to you, Sakshi and Rudra. To you as well, Momita. Very good afternoon. She asks you, Rudra, is this the true turn for the markets or should I still tread cautiously in this market? And also, if you can advise, can I start averaging my Adani Group stock positions? I have Adani Enterprises, Adani Total Gas, Adani Ports, and even Adani Green in my portfolio.
Yes, I understand because all those people who have bought every dip in last 1 month, they have really got burnt because every dip they buy market was not giving any bounce. It was just falling, falling, falling. But now let me tell you what is very important. These are words from late Rakesh Jhunjhunwala. How do you find out whether the market is ending the fall or not? So very clearly, late Rakesh Jhunjhunwala sir told when market starts not responding to bad news, then you see clear signs of reversal. So whenever you have a bad news in market and market does a gap down opening, but then it sees a lot of buying and closes at the highs of the day. For example, take even for that matter today. So you had a lot of negative news yesterday saying that this ceasefire may not hold on and already Israel is attacking Lebanon and Iran is not happy. So all this news also cannot take this market down beyond 100 points on Nifty, and that too after yesterday's 900 point rise. So you saw yesterday 900 point rise, but all the bad news is just causing 100 point fall in Nifty. So when this bad news does not impact market, that is telling me market is reversing. So that is the reason why, and forget even yesterday's that huge move of 900 point. See the market last 2-3 days before yesterday's move. You could clearly say that yes, the negative news in market is not getting priced in, and whatever war front negative news was there, market used to open gap down 100 point but still close 100 point in the positive or close 200 point in the positive, having seen a 100 point gap down open. That is a clear sign that market is different and the war front news is different. Whereas earlier, any good news which used to come was getting ignored, and any small bad news, market used to collapse. So I am clearly telling I will have a stop loss which is at 23,200. There is no one who can say with certainty that market will do this. So you have to have stop losses. So 23,200 on Nifty will be my stop loss. If you close below 23,200, all the bullish view is gone. But I want you to buy not here. If you don't have fresh position, buy it at the range of 23,350 to 23,500 on Nifty spot, so that your stop loss and the entry level gives you a good risk reward and your stop losses are not deeper. If you are buying here Nifty, and if you keep a stop loss of 23,200, you are keeping a 700 point kind of a stop loss which is too deeper. So I am advising buying only in the range of 23,350 to 23,500 on Nifty spot. Keep a stop loss of 23,200, and let me also tell you very clearly, if Nifty spot crosses 24,300, then I will say you will see further more rally in the market. So right now if you are buying, the upside is just around 24,300, whereas the downside can be as deep as 23,350. So I don't have a great risk reward to enter a fresh position here. So wait for those dips, and let me tell you one very important point. Market will not see a V-shape recovery. The damage what war has caused now, you will see higher inflation. You will see crude being at 80 to $90 per barrel as normal. Forget that $60 per barrel what we saw earlier. That will not come back. So what I'm only telling, even if all these escalation and these ceasefires everything end, and let me tell you, we get back to normalcy when it comes to war front, but the damage what war has caused already, to get out of that damage what it has already caused, you will take 3 to 6 months time. So I am very clear, you will definitely see another 1 quarter to 2 quarter of washout. Market may not fall, but the recovery will also take time. I am not telling in next 1 month you will see all-time high. So it will not be a V-shape recovery, it will be a U-shape recovery. But I am very clear, It is a buy on dip market right now, and buy right stocks. And this is the time to even rebalance your portfolio, throw out all the garbage if you have, and then buy into good names, good quality stocks, and all the sectors and stock names I've told at the beginning. If someone even watches it back later on, you will have a lot of sectors and names to choose from.
Okay, fair point. I hope this has given you a deep understanding as to how do you move forward with your query there. Next, we have Guru asking the question. He says, good afternoon, Sakshi, and good afternoon, Rudra sir. I want to know if it is the right time to buy GM breweries at this point in time. I think the results have also just come in. We will, of course, get some details on that in a bit. But your own sense on GM breweries, we'll pull out the results if we can, for the stock as well. But how have you been looking at the stock so far, the technical charts, and what is the outlook there?
Sakshi, stock is consolidating now for a long time. Definitely a stock one can have in their portfolio, but stop loss at 900 should be definitely maintained. So keep a closing basis stop loss of 900 rupees and hold on to what you have. And yes, if this stock crosses the immediate resistance, which is at around 1100, then yes, you can see the stock getting back to those levels of 1300. So right now stock is consolidating. Once it crosses 1100 and closes above that, yes, momentum will come in the stock and it can move towards the 1300 zone. But keeping a stop loss of 900 is a must on this stock.
Okay, I hope this has answered your question. Of course, we'll be sharing the details of the earnings when they come in on our channel as well to all of you. I think just now the results have come in, and we'll get to know in a bit what those details are. Anyways, you've got the technical outlook here on GM Breweries. We'll take Shomalia's question next. He's from Kolkata and he wants to know from you, Rudra. He has 8 lots of Nifty for 28th April expiry. 24,350 call option, bought at 211. Should he be holding it for BTST or not, is what his query is.
For clear BTST trade, I will say no, book your profit. And I'm very clear, I might go wrong, but I always put my neck out and give one-sided view. What I'm saying is next 1, 2, 3, 4 trading session, if you get further dipped, in fact, yesterday, whatever longs I had before the ceasefire happened and I was very bullish on market, on the gap up of that 700, 800 points, I exited all the trading long positions what I had, but market from there went another 100 points on Nifty. But after seeing today's move, I'm feeling okay, good that I sold. It is only God and liar who can sell exactly at the top and buy exactly at the bottom. I'm neither of those. But what I can tell you is if you are just looking for BTST, that is just for one trading session, I will definitely not go long here. And if I have a long position, I will exit. Wait for those opportunities where you get a dip in market and Nifty comes to those levels of 23,500 or even 23,350. In that range of 23,350 to 23,500, you will have a lot of opportunity and good time and good sectors, good stocks to buy if you want, or even Nifty if you want to go long. That will be a good entry point, because right now if you are buying, you have to keep a very deep stop loss, and the upside is again limited to the 24,300. So you have a 400 point kind of an upside and a 500 point kind of a downside. It's not even 1:1 risk reward, and I don't want to bet when risk reward is not in my favor.
Okay, got that. Taking the next question now. This one is from Prasanna from Vishakhapatnam. He says, I need a long-term view on Infosys. He's been having a SIP approach to Infosys since last year, and he has already invested about 80,000 rupees there. His average price is 1,533, and he says that it's about 1/10 of his overall portfolio now, but right now he's incurring some losses. So what should he be doing? So one on Infosys, Rudra, and also if you could share an outlook on the entire IT sector, because tomorrow onwards is what we will start to see the reaction on the IT earnings.
Yes, Sakshi, I'll be very, very clear. Two stocks which I like in IT is Infosys and second is Tech Mahindra. Okay. And even HCL Technology looks relatively strong on the chart. So it should be Tech Mahindra, HCL Technology and Infosys. And let me be very clear, let our viewer continue his SIP and continue that whatever he wants to add on to Infosys on every monthly basis, whatever he is doing is good, great. And I have only these three stock names. But however, What is very important is he said only 10% of his overall portfolio is IT, which is also very, very good. So don't overweight IT in your overall portfolio. But if the same person would have asked me, Rudra, I'm having only Infosys in my portfolio and I'm making it as a SIP and every month I will put money into Infi and nothing else. Then if that is 100% weightage of your portfolio and IT is 100% weightage in your sector, in your portfolio, that is not at all right. So what I'm advising is don't have more than 10% of your overall portfolio in IT as a sector. And in IT, the three names which I like, as I've already told and I'm repeating, that is HCL Technology, Infosys, and then Tech Mahindra. But I'm not gungo on IT, so still you have to give time. But if you are looking for very long term, let us say 5 years plus, if that is your time frame, yes, IT is giving decent valuation comfort right now. And for me, Infi and HCL Technology trading at 16 times, 17 times their forward earnings, that's a very, very good, comfortable valuation zone to buy in. But for me, if you are not looking at a 5 year plus kind of a time horizon, IT is still not the sector to be in, but have weightage limited to 10% of your overall portfolio.
All right, okay. So I hope that this has given you the complete understanding of how to approach the ID sector as a whole, what's the expectation there, and the key favorite stocks of Rudra also there as well. One quick question again, we'll squeeze in. This is Gaurav who's asking you, Rudra, for Zaggle Prepaid. He has 100 shares at 210. What would you advise?
So again, a stock which I don't track, and let me just look into the chart, and if you can help me out with the code or the name, Sakshi.
Yeah, Zaggle Prepaid.
Zaggle.
Zaggle Prepaid Ocean Services, and
Okay.
this one is currently trading. I'll tell you the share
Yeah,
name
so I
as well.
got the Zaggle prepaid stock.
Yeah.
So clearly in a downtrend and last 2-3 trading session, yes, you have seen some amount of bounce. So unless you understand fundamentals of this stock and if you have any other inputs, then you can take a call. But purely on chart, let me tell our viewer, keep a strict stop loss on a closing basis at around 230. So 230 should be the stop loss for the stock what you are holding now, and with that stop loss, yes, you can hold on to Zaggle prepaid. 230 closing basis stop loss is a must on this counter.
Okay, I hope this has also helped you out. Thank you so much, Rudra, for sparing your time for all our viewers and, of course, sharing all those insights, addressing their queries. It's always good to have you with us on daily calls and hope to see better times ahead together in the markets as well. Thank you so much for being with us. All
Thank you.
right, we'll now get into the second